Hi class, this is Liz Brown with Richland College. Let's do a cash flow example. Here we have Videophone and we have their financial statements. We have the income statement for the year ended December 31st. So this is for a period of time. And we have the balance sheet for Videophones. Notice December 31st, this is on a day in time. We are required to complete the cash flow statement. Notice that the cash flow statement has a title and it is also for a period of time. Let's take a look at our financial statements and classify items as operating, investing, and financing. Here is a very useful tool here to help us calculate our operating activities, where we're going to start with net income, add amortization and depreciation, add loss, subtract gains, subtract increase in current assets, add decrease in current assets, add increase in current liabilities, and decrease in current liabilities to get us our net cash flows from operating activities. Let's color code our financial statements here with yellow being operating, red being investing, and green being financing. Let's start with our income statement. We have our net income. That is what we're going to begin with. This will be on our operating statement. Next up, we have any amortization and depreciation. Let's look down here. Here's depreciation. Let's claim that for operating. Next up is any gains or losses that we might have. So reading down here, COGS, operating expense, loss on land. Go ahead and claim that as well. Now we have any increase in current assets and decrease in current assets. Notice that two things are changing here. Now we're seeing the word increase and decrease, and we're also looking at assets and liabilities. So we need to change financial statements. We need to come down here to our balance sheet. When we say increase and decrease, we need to look at the change in prior year to current year. Let's take a look at this cash. We ended 2020 with $227,000 in cash. We ended 2021 with $254,000 in cash. Here we have an increase in our cash. Let's do a quick calculation here of 2021 minus 2020 to give us our numbers here. That is the amount of increase in cash. Let's add these to our assets and to our liabilities. Now that we've had our increase or decrease, we can go back and look at what we need to add to our cash flows from operating activities. We need to subtract an increase in current assets and add a decrease in current assets. The first current asset we have here is cash. Do not put cash in your operating activities. This is a cash flow statement. Our focus is what is happening with cash. Let's go ahead and update our cash flow statement for the cash. We will put these at the bottom of our cash flow statement. We have a net increase of cash of $26,800. Cash at the beginning of the period. Let me remind you that the ending balance of cash last year will be the beginning balance of cash this year, right? If this is the amount of cash on midnight of 2020, it is the amount of cash we have January 1st at 12:01 in 2021. And we know our cash at the end of the period of $254,600. So cash, we have put this on our cash flow statement already. We are not going to double count this by including this in the current asset section. All other current assets will fall under operating. Let's color these yellow to reflect that. What else is going to go in our operating section? We have increase and decrease in current assets, also increase and decrease in current liabilities. Let's find our current liabilities. Here we have accounts payable, interest payable, and income tax payable. Remember that current assets and current liabilities are items that we expect to be able to use in the next year or will have to pay in the next year. Here we are completed with our section of the operating cash flow. Let's continue and look at investing and financing. Recall here that our investing activities are changes in long-term assets, and our financing activities are changes in long-term liabilities and changes in equity, so debt and equity. So here we have our long-term assets. These are going to be our investing section. Next up, we have our financing. This is going to be our long-term liabilities and our equity, our debt and our equity. Next up, we have some additional information we need to classify. We are going to purchase investments in bonds for this amount. What type of activity is this? A purchase and an investment is going to be an investment. This is going to be a long-term asset. Sell land, giving us the sales price and the original cost. Selling land, that's a long-term asset. This will also be investing. Purchase equipment on a 3-year note. Purchasing equipment, that's a long-term asset. That would be investing. But a 3-year note, that would be debt. That would be in financing. What this is going to be is non-cash activity. So we'll need to update that as we do our cash flow statement. We declared and pay a cash dividend of $30,000. Cash dividends that we pay as a company are going to fall into debt and equity, which is going to be in our financing section. We are now ready to start our cash flow statement. We are going to start with our operating activities. We're going to start with our net income. Our net income for the year is $104,000. We have now put this on our cash flow statement. Next up, we're going to add back any amortization and depreciation. Let's add back our depreciation. Depreciation is $37,000. Here we have added this into our cash flows for operating activities. What's next? Add back any losses and subtract any gains. We have a loss on our sale of an asset. Let's add that back. Our loss on our sale is $9,000. Here we've added this to our cash flows from operating activities. Next, we're going to subtract any increases in current assets and add back any decreases in current assets. Let's note what we need to do next to these. Accounts receivable is increasing by $22,000. We need to subtract. Inventory is decreasing by $40,000. This is a decrease in a current asset. We will add. Prepaid rent is increasing. Increase in a current asset is going to be subtracted. We have now updated this. Subtract, add, subtract. Next up, we will go into our current liabilities. We will add increases and subtract decreases. Accounts payable is decreasing. We will subtract. Interest payable is also decreasing. We will subtract. And we have income tax payable increasing, so we will add. We have now updated these on our cash flows from operating activities. As we are complete now, we will sum this. This is the sum of net income plus and minus these accounts. Be sure to include net income in your calculation. We get $140,800 positive on our cash flows from operating activities. Now let's move into our investing section. The investing section is our long-term assets. We have an investment, land and equipment, and the matching accumulated depreciation. We also have some additional information here. Let's start with our investment, $115,000. As we can see here, we purchased an investment in a bond. This means that we paid out $115,000 in cash. It is an outflow. Note that we added a purchase of investment in bond for negative $115,000. The cash flows from investing and financing follow the direct method, as you've seen in your readings. This means if we pay cash, we decrease. If we receive cash, we increase. Next up, we see the land. Note that their land has decreased by $40,000. Look at this note here that we have. Our selling price was $31,000 and the original cost was $40,000. How much was the actual cash? Remember, we had a loss of $9,000 and we have a selling price of $31,000. We received cash of $31,000, and that is what we're going to reflect in our cash flow statement. Here we have proceeds from sale of land. We received cash from the person who bought the land of $31,000. Also note that we have the loss on the sale of the land of $9,000 notated up here in our operating section. Finally, we have equipment. It increased by $70,000. What we can see down here is that we purchased equipment on a 3-year note. Wait, I remember this. We did not use cash. We are going to note this as non-cash on our cash flow statement. We will put a note of non-cash activities. Purchased equipment issuing a notes payable, $70,000. This completes the investing section. Let's take a look at the cash flow statement and sum our cash flows from investing. We have a large 115 negative and 31,000 positive to give us overall negative $84,000 of cash. Let's take a look at our financing. Financing is our debt and our equity. We'll look at our long-term liabilities and what's happening in equity. Here we have a note payable that's increasing by 70. Let's not forget, this is the same note payable we just took care of. We have already put this on the cash flow statement. Next up is common stock. It has had no change. We do not need to put this on the cash flow statement. The last piece here is retained earnings. Let's be very careful with retained earnings. Remember that retained earnings is made up of add net income and subtract any dividends. Let's take a look at what we have for that. Net income we've already taken care of on the cash flow statement. And we have declared and paid a cash dividend of $30,000. Let's do a quick calculation here on our retained earnings. Retained earnings change. Net income of $104,000 less dividends of $30,000 gives us a change of $74,000. This is exactly what we're seeing here in our calculation. We've already added our net income to our cash flow statement. The only thing we need to account for is our $30,000 in dividends. These are dividends that we paid as a company, and we paid them in cash. This will be a cash outflow. Let's update our financing section. Here we have our payment of cash dividends for negative $30,000. We can now see the sum of operating activities, which is positive $140,800. We have cash flows from investing of negative $84,000 and cash flows from financing of negative $30,000. We need to add the three of these numbers together. This calculates to $26,800. This is exactly what we needed as our net increase in cash, $26,800. Our statement of cash flows is complete. I hope this example was helpful. Please let me know if you have any questions on the discussion board.